Silver crashes, the stock market chops, and investors keep that rotation going. More about all this and much more when we start the show.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully, lots of great opportunities and ideas for you throughout the show. Well, the stock market had a rocky week this week, with many tech stocks really taking some big declines. The broad market, however, was much stronger, as the NASDAQ takes the brunt of the decline and the broad market really holds on pretty tight. As a matter of fact, we saw some pretty good gains in midweek on the Dow Jones Industrial Average, as that was able to edge out a new high at one point before turning down. In the tech stocks, the widely helds have had a pretty big correction, like 5 to 10% on the downside for many of them, and for many in the group, much worse. In fact, Netflix down some 12% from its high, Nvidia about 17%, and Tesla a big down week this week off of its high at worst point by about 20%, and that came really fast, as it appears that competition is picking up and their rate of deliveries of their cars has disappointed. So they're the superstar of solar, looking like maybe it's disappointing a lot of investors. And you might know that somewhere about a couple weeks ago, we saw one of the big analysts out there talk about Tesla going to 1,000, which we thought was a bit absurd, and Tesla turns tail and moves to the downside. We don't think that's quite over yet in Tesla. So while the NASDAQ from its highs down about 5.4%, the S&P 500 correction so far less than 2%, and that is really not even a correction, right? We've just really seen some thrashing going on. For the week, the stock market, which looked like it was going to be on the downside, actually is pretty much hanging around the unchanged mark in this holiday shortened week. S&P 500, NASDAQ, Russell, as we're doing this show, about unchanged, maybe just up a couple of points, not very much in there. Dow Jones Industrial Average slightly better on the week. The bond market again has had a big down week, as bonds worldwide have been falling very sharply. Our 30-year bond has moved down 2 points. That's the Treasuries, and the 10-year Treasury yield moved up about 8 basis points this week. So that's been moving up steadily, and that yield curve continues to be flattening, and that is often a threat to the markets. The dollar had a small bounce, and that's really what we were looking for in there, and we believe the dollar is still very negative. We'll be showing our members in our short-term view later on that we think that there could be a little more bounce in the dollar, but overall we think there is a ton of risk in there. Gold, a big downside move, $30 or so, and that was really led by silver. Nobody really knows what happened to silver, but there was one of those, they call it a fat finger collapse, as it fell all the way down to 1434. Now, as we're doing this show right now, it's trading about 1546. That's down about 50 cents on the day, a little bit worse than that. And so it bounced back from that severe move on the downside. Still down about $1.15 on the week in what is a horrible week for the silver market. We're expecting a bounce in there soon. In fact, I just at this level nibbled and bought a little bit in there for a bounce for a scalp. And overall, this silver and gold market for the intermediate term has really broken down in here. We've been warning about this for a couple of weeks, that it was changing tone, and sure enough, some major selling comes in. The oil market also had a big hit, down about 270 on the week, as the inventory numbers came out. Now, we thought that it had run up too quickly. It had 8 straight winning days before getting into this slide just for this week, and now it's moved down into support. So again, for our short-term view for our members, we're going to show you that we think that there is an opportunity in there in the oil market coming up. So make sure you take a look at that members video. So the stock market plainly has been churning. While the techs have had these big declines, investors are really using the drops that they've seen in here to be picking up specific groups. They think that, this is an opportunity, and the tech decline is given some softness in there in the markets, and they're intermittently picking up steels and materials, and they've been pushing the bank stocks up, though today they're really starting to look like they're stalling. And housing stocks have been moving up pretty good. Now, generally what happens is that interest rates go up and housing buyers get a little threatened, so they step in and start to buy. So that's what's got this rotation going on. Every time you look, the market's either taking a big hit or techs are rebounding, and some of the other groups are trying to get bought. And it's like investors are forgetting that, for the last 8 years, the stock market's been juiced on the upside in a big way, as all of the central banks have been active in printing money, and many of the central banks, through their sovereign wealth funds, have been buying up a ton of stocks. Japan has been one of the real actors, I wanted to say criminals, when it comes to that, and that's been helping to push up markets, as Japan has major holdings in many of their high cap companies that are, in my opinion, excessive. So, investors think that it's smart to be using these dips in here to be picking up this group, because they think it's all a rotation. What I think is that before this is all over with, they're going to find out that the nibbling they're doing in some of these groups is actually going to bring some pain, like the tech stocks have been bringing to them so far. Historically, divergent markets, like we're seeing right now, are weakening markets. We see this many times in history, and I've traded many bull markets and many bear markets and many crashes also. And usually there's some other hints going on. Well, commodity markets are extraordinarily weak. We've gotten some bounce in grains, but that's been minimal compared to what's going on in a lot of other markets. We've seen this weakness in oil and these plunges in gold and silver, and overall, not great growth out there in the whole world. So I think what the commodity markets are telling us that these central banks, when you look at just about everyone in the world except Japan, who is kind of holding pretty tight on their dovishness, all of the rest of them speaking hawkish. FOMC, the ECB, the Bank of England, China, all of them so much more hawkish right now. And I think the commodity markets are saying that this pulling of stimulus that is at least being threatened does matter. And I think what we're going to see is that stocks which are holding right now are going to start to see some of these air pockets on the downside. If silver can do it and plunge the way it does, well, why can't stock indexes, and of course their huge connection to the massive amount of ETFs out there, why can't they hit the same air pockets? Well, I think that they're going to. And July, August is really the time that we think that there are significant declines. So July has seen, just in the early part of it, this rolling over over in this chop going on. And we think that before July ends and into the following month, we're going to see some of these air pockets in the stock market too. So watch for that. As a matter of fact, I think it's time to be very careful. All right, so now let's look at what happened to the stock market in this last week as we look at our 60-minute chart of the S&P 500. Do this every single week. The gray area that we're looking at is the overnight trading, and the white area is the pit trading. You can see in there that on Monday, they tried to rally them overnight as we had this lift in the market that you can see right in here. But the techs had this huge break right in here. Look at this S&P fall right there. That was a pretty good downside break. This was the beginning of the gold and silver as they started to move on the downside. Oil had a little bit of a bounce. U.S. stocks ended up mixed, but that they gave it up so much that showed a lot of weakness and kind of set the tone for the week. Auto sales came out really weak. The ISM was positive, and the PMI was weaker, and that NASDAQ reversal in there was really big. Markets closed on Tuesday for Independence Day. Still, the indexes were trading overnight and for a few hours during the morning session in here. And you can see in there as futures were open a half a day, and there was another big decline right over there. You can see that. So there's been the beginning of this type of selling going on in here. On Wednesday, world markets were mostly higher. Oil down about 4% after that 8-day streak. And a fear started to come in the market as North Korea tested an ICBM that can reach Alaska, and that's really started a lot of rhetoric, and who knows where this is going to go with North Korea. The Fed came out, FOMC minutes. You could see not much happened in there when that happened. The Fed really, they're really split on the balance sheet. They're trying to remain hawkish and tell the Fed that they're going to start to reduce the balance sheet and that they're going to keep interest rates tightening in a steady way, but they're really mixed, and I got to tell you that they were confused. See that hashtag and the Fed? I almost want to put that in every single one of my tweets when I put them out there, because I strongly believe that they have manipulated this market with other central banks, and that ultimately there's going to be a giant cost to that. The NASDAQ bounced, but Tesla was down 25 points as the realities of the struggle that I think that they're ahead of them is really coming into view. World markets were weaker on Thursday. Eurozone was down after ECB comments that really said that their warning of the removal of the QE that you can see right there. Worldwide, bonds fell very sharply. POTUS came out and warned about North Korea. U.S. bonds followed on the downside. ADP was up 158K, which was a little bit weaker than expected, but then we got a better payroll number on Friday, and you could see the markets, they got hit pretty good in here, and that's 3 out of 4 days that we got good downside movement going on in the market. Now, Friday brings a bounce. Payroll numbers come out, they were strong. The bond market really remains weak on that news, and nothing much happening in the markets around the world overall, but U.S. employment numbers come out strong. 222 was a lot better than expected. U3 at 4.4, and U6 ticks up from 8.4 to 8.8, which isn't exactly good, and you would think that they would look at that as some softness, but I don't see much commentary about that. Oil cracks again on some inventory news, and And again, I believe it's getting into an important area, and you're going to want to watch my member video on that. Silver has that flash crash. It hurts gold for sure. And the techs lead a bounce on the upside. And I'm telling you, we are in a choppy market in here. We thought it would be a down week, and we thought that the S&Ps would trade down to around 2,400. They get down to about 2,405, as you can see right there, and then put the bounce on. So, basically our call for the week was pretty good when you look at that. Take a look here at the calendar for the coming week. The big events for the week are, you can see Janet Yellen testifying. Wednesday will be before the House, and Thursday will be before the Senate. And then we get the Consumer Price Index coming out on Friday. As far as earnings go, the beginning of the bank earnings season really begins on Friday of the coming week. We get Citigroup, JP Morgan, PNC, and Wells Fargo, and that is going to open up the floodgates as we get into the earnings season coming up. So that's a look at the calendar for the coming week, and we could get some pretty good movement based on what we see coming as far as the Janet Yellen. Those are the old Humphrey Hawkins semi-annual testimony in front of Congress. So that can bring some fireworks, and that might be setting up for some pretty good sized moves on Wednesday or Thursday of next week. That's it for the opening segment, and we'll be right back with the best and worst stocks for the week. All right, we do this every single week. We look at the best and worst stocks for the week. I actually want to talk about something that may be, one of the best for the week, and that is that come July 15th, I'm going to be speaking here in Chicago in front of a couple of groups that are trader groups. It'll be in Bloomingdale, Illinois. And for those people that are local, you're invited. How about that? You'll be able to hear me speak. I'll be talking about changing the mindset for option trading and how to improve your entries and exits as traders using some really cool indicators. And I think that the combination of that, and I'm going to take Q&A and be doing some coaching, individual coaching of people. It's 3 hours long, 9:30 in the morning till 12:30 in the afternoon. Lots of great stuff. These are two great groups. One of them is called Chicago Northwest Burbs Trading Group. The other is called the Call Group. And so we'll be getting together in Bloomingdale, Illinois. If you're local and you want to attend and get the benefits of what I'm going to share and meet me, get to say hi, and maybe even get coached, write me an email to slim@askSlim.com, and then I will send you the information. I kind of want to do it that way rather than give the address, because I don't want them to get overwhelmed. I kind of want to know how many people might attend that. So July 15th, 9:30 to 12:30, send me an email if you're interested in attending, and I will give you the information and let the group know. So that ought to be fun, and I look forward to meeting a whole bunch of great people. All right, so this is the best of the week. We're going to look at stocks. Sorry about that. A loud siren coming by in here. And I need better soundproofing, that's for sure. All right, so for the best of the week in stocks, there actually is not that much to report in this choppy, narrow week. And again, some 6-7 weeks that we've been in this 2% range in the S&P 500. That is very unusual. That didn't get many stocks moving in here. The best stock of the week is up about 8%, and that is on a rebound, and that is AMD, and AMD got hit pretty good when news came out that NVIDIA had a competing chip processor. AMD has had the chip that the cryptocurrency miners were using, and that had the stock really getting a lift. But then when this news came out from NVIDIA, it moved down pretty sharply. I think it's made a top, and that it's likely to be moving down. Now again, I'm a cycle analyst. I look at the rhythms of the market based on the essentially cash flow, cash in, cash out, and there is a regularity to those movements. And through cycle analysis, we look for that, and therefore look at a lot of formations and use other tools to get a sense for the direction of markets, the direction of stocks. And here is AMD, and you can see in here as we have the cycles marked off. Now, when you get a cycle like this, so a cycle is measured from low to low, so you see that low right over there, and you see that low right over there. Those lows that you see pointing right there, and this one right over here, you can see are at the end of corrective periods, right, like this. When you get one that's flat like this, in other words, it rallies and then gives it all up, and then rallies and doesn't make the high, well, you can see that's how you make Head and Shoulders tops. So we have the peak, the high in here, the high that fails in here, and then it rolls over. This bounce that we're getting here this week, where it gains 8%, I don't think it's real. As a matter of fact, I think it's going to move down again, and I wouldn't be a bit surprised to see this stock approach 11 again before this is over with. You can see our projection in here has it moving down into August to this next low period. So it moves up 8% on the week, and I'm going to say a big no to that one, and I think we're going to see more downside in AMD. Now, airline stocks have had a good move in here this week. They were overall probably the best group, airline stocks and the home builders. I'm going to show you both of those. Some news has come out that Qatar separately is in some other news and turmoil there in the Mideast. They're interested in American Airlines, and it's not new news, it's kind of recurring news that we've heard in there. And American Airlines has moved up. And add that to the oil price softness, and remember, oil costs are the biggest input cost to the airlines. That has the airlines moving on the upside. As a matter of fact, American Airlines has moved up through an important resistance, and we think that this is actually going to get a pullback in here. Now, American Airlines on our work is extreme overbought right now, and that shows up on what we call our option bias indicator. That's something that we put on our daily charts, but I'm going to show you the weekly chart right here. And just take it for granted when I tell you that it is extreme overbought when you look at that. So it gets up through that important cycle peak resistance, and now we are looking for a correction in there. Now this correction has about a month ahead of it that you can see right in here, getting down into those two blue lines kind of signal the timing that we think the downward correction is going to be. The stock is now trading around 53. We think it's going to be under 50. And that's not a major pullback, right, in the next month, and then be moving up again. So you can see American Airlines gets a 5% gain on the week on the Qatar news and on the news of the weaker oil. That always helps the group, as it did United Airlines also. Now, notice the alignments in here. I've got United, Delta, American, all have its cycle rhythms on the bottom here. They're all calling for 3 to 5 weeks of downward correction, and you can see the much worse pattern in here on United Airlines, where American moved to the new high. Based on that background news, United Airlines was not able to do so. So we think it's going to have another pullback again. We're going to look for it to move down from this area around 79 back to the area down below 74. And in about a month or so, that's probably going to set up a nice buying opportunity. You can see Alaska Air, though, a much better pattern. And this stock we think is very viable, as it is an upward stair-step pattern. You can see this is a negative cycle right over here. You see that? It closed much lower than it began. That says the next cycle in the rally phase will not make a new high, and you could see that it did not, but it was actually quite a bullish cycle. It bottoms a little bit early and then turns up again and has this giant move. So it moves up from 70 to 101 in one rally phase. That's incredible. And then comes down and has a pretty good correction. So it gets all the way back down to about $82, but it's in this rally phase, which we think has got more time to go. And we think if Alaska Airlines has a pullback, it will be a buying opportunity. So that's a look at the airline stocks, which were up 5%, 3%, and 3% respectively of the three we just looked at. Now we'll talk about the home builders, because what happens when interest rates go up is that home buyers, they start to scramble because they say, well, interest rates are about to go up, I better buy something soon before I get shut out of a more expensive market as far as mortgages go. And we're also in a period where housing inventories are tight. Well, that, of course, would keep housing prices firm. So you've got firm housing prices, you've got a little bit of a scramble going on, a fear about raising interest rates, and that has buyers coming into the home builders. Now, they're getting really long in the tooth on this rally, some of them, but they've had some good gains. D.R. Horton up 5%, Toll and Pulte both up nicely, about 3% on the week. You know, much better performances than we see in the market. Let's look at D.R. Horton, the best mover in this group on the week. Now, one of the things that we said in a video we did this week, that there is a huge synchronicity of expected lows, and in other words declines in stocks into the mid to late August period. And you can see the same thing in here, as this low points to mid-August right over here. So we're going to look for this stock to give a pullback and into this intermediate support zone. We think if it got down in that 34 area in this next several weeks, that's going to be a super buy. And you can see our projection as we expect the stock to move to the upside again. So they've had pretty good upside moves, and we think that they're entering into a period for a brief correction. Now, if you look at that last correction right in here, in other words, that's this one right over here, it moved down, but it took about 3 weeks to move down in a pretty mild way. Usually when you stay up a long time, you don't give up a lot of ground. That's the same thing it did in this one here, but you could see when it peaks early, well, then it falls for a long period of time. So you can see how what I do is I just kind of mimic the actual trading when I point down to these cycles. So, this says that you're going to roll over, get a correction for a few weeks, and then that should be a super buy and then move up again. You'll notice that Toll, T-O-L, has a very similar pattern in here, and again, we'll call this super bullish overall. It actually is going hyperbolic in here, and we think there's more to it because you can see the upward trend right in here, and then this long advance and mild correction right into here. That's this cycle low right there, and here we're looking for just a few weeks and then up again. So this shows you that Toll, which is in this category of best of the week, overall is not only best for the week, but really good as far as patterns go. And here is Pulte Home. You can see the synchronicity in these patterns all look the same as we look for a decline into the mid-August area and hit that support zone, which we think would be a screaming buy for this entire group. So look for a few weeks down in the home builders, and then I think we buy them. Last stock we're going to talk about on the best of the week is Twitter, TWTR. I'm long this stock, and I love the action in the stock, and I'm going to show you why. I think that this stock is very buyable, and that there is a couple things. First of all, some analysts have come out and said that they really like the way that the model, that they're changing their model. They have been doing some other things. I've been talking about the fact that for a long time, more than a year, that until Twitter makes some significant changes and they can use, and somebody thinks that, well, there's a chance to really monetize Twitter, then their hundreds of millions of users are a lot more value. They value it by the user and by how much they think they can monetize it. Well, I think Twitter is putting in a big base, and that, kind of any minute it can move pretty sharply to the upside. Here is Twitter right here on the weekly chart. Now, you can see that it's basically outside of, one big up spike right over here. It's been trading in this area between 15 and 20, 21 for just, well over a year. And just, you can see this, right in here, it just stays in there. I think that we're going to exit that period and get up testing that mid to high 20s again before you know it. Let me just get a closer look at this pattern right over here. There's just signs of buying coming in. When it starts to get down on this weekly patterns to these, after a gap breakout on the weekly right there and a bull flag, and then is getting support on those moving averages, chances are pretty good it's going to get an upward spike in here, and maybe a little correction, and then move up again. So that's all August, September, October I'm pointing about. And I think Twitter is a great investment in here because somebody's going to love what they're doing and start to really grab the stock. Now, when you look at the daily pattern right in here, there's small pattern and big pattern. So I have both of them lined out for you. You see this big pattern right in here. It's really clear. Now, the big pattern is in this rally phase, and now I want you to see the small pattern. Here's the small one right in here, and it corrected into what I have had labeled as the short-term support buy zone. And you can see these low waves where it keeps getting sold off and then bouncing in there. We call those low waves. Those are bullish. And then the stock starts to move up again. If I would extrapolate out of this how this cycles look like they're going to trade, I would say you probably get a pop up here somewhere to the high 18s or 19. Get one more little rollover right here. See, I'm following this, and then explode right up over here. So I think all of this period right in here over this next week or week and a half is an accumulation period on this stock, because I think it's going to have a pretty good move on the upside. I bought a little bit a few days ago. I bought a little bit more today, and I think that it's in good shape when I look at Twitter. So that is looking at the best of the week. Twitter only up a couple percent on the week, so but I brought it because, it's feeling to me like a really good opportunity. Not much downside risk in there, I don't think, but the upside potential is pretty good. So if it's good opportunity for me, I want it to be good opportunity for you. We'll be right back with the worst of the week. All right, for the worst of the week, the worst stock for the week clearly was Tesla, TSLA. We thought it was topping, and I put out a premature video around the second week of June, so that would be about 3.5 weeks ago, where we said that the bubble has popped. Well, it took a little bit more time for the sellers to come in, so we were early on that, but still, I would say, really very, very right about it, and alerted people to the fact that there was going to be a decline. And actually, the stock moved down 14% for this week, and has moved down from 387 all the way down to making a low of 307. So a little bit premature, but if you listen to us, you either sidestepped or capitalized on some 80 points on the downside and some 20% decline in Tesla. So we're going to take a look at this Tesla chart, and you will see what we were looking at in here. So I'm actually going to do some little longer term analysis in here so you can see what we were looking at. First of all, you see this right over here. That is the longer term, or the what we would consider showing up on a monthly chart. So you get a rally and a sell-off right in here. So if you look at the next timing right in here, the rally and then the sell-off. So this sell-off looks like it points into October right there. Now, there's some smaller cycles in here, and this goes to the middle of August. That could actually make a bottom in the middle of August. And there's some smaller ones right in here, which goes out till nearly October. So sometime in here, in we're going to call it late August to late September, which makes the most sense to us, will be the low. And that's, there's a lot of variance in these, but you could see this huge collapse. It gets up into this area between this the 78.6% of the major fib extension and just above this minor 100% fib extension confluence. That would be a great spot for it to stop, and you could see that. Now, our downside target actually is this cycle low right over here, which is the 38.2%. So that would take it down to under 300 in here, and that would be sometime in August, or we'll call it mid-September. We're not exactly sure when those lows are going to come, but we do think that it's going to be pretty, let's say, a lot of good downside waves in there. So let's just switch over here as we blow up the daily chart. And you could see, speaking about blow up, this is a blow up. And when we look at the smaller cycle rhythms in here, we look for a low, a temporary low, to come in mid-July. That's about, we'll call it 3 or 5 days away, in this area of the cycle low supports. That lines up this cycle low and this cycle low. So this is an important area. We're expecting just a little bit more downward chop in here as it gets to around that $300 area, and then a pretty good bounce. You could see this cycle in here. This bounce, which may be even tradable on the long side, you could easily get from close to 300 or around 300 to 320, 325. Good trade, right? But then we think it fails and moves down again into much later to that low. Now, when I highlight this cycle right over here, that points to August 4th. So that's that shorter weekly cycle. So we think there's going to be a decline, a rally, and another big decline. You can see into that period of August, and Tesla, which we spotted nicely as in trouble, certainly has been. I would say that you look for this little bottom to form, look for a bit of a pop, and look for more on the downside in Tesla. 14% down on the week, and definitely a stock that we sniffed out and we think has more downside to go. So look for a bounce, maybe 20 points or more on the upside, but then down again. Steel stocks, they had a down week. AK Steel down 14%, as we get more deflationary whiffs and more whiffs that people that are chasing these groups that they think are going to be next in the rotation just can't be trusted. But now this pullback has moved into important areas, and we actually think the steel stocks are okay, and I'm going to show you why. I actually like U.S. Steel, where it's come down to, and the rest of the group looks pretty good. I'm just going to feature AK Steel and U.S. Steel right now, but I think the steels are viable on these pullbacks. So here is the AK Steel pattern, and it's been in a bouncing area, in other words, a rising phase, and I can point the rising phases out to you. Now this bottom line, this dotted line that you see right over here, is the DBB, so that's the base metal, and you can see how the DBB tracks pretty closely to AK Steel, and you can see the important low right over here, and the important low right over here, and then the important low right here, and then it does the same thing right here. So it's in this rising phase and gets this pullback, and it's really at an area where we would expect that it would get we don't think it's over with on the upside, in other words. So we think it's viable. When you look at U.S. Steel here, and I'm going to show you the daily chart on this one also, gets down 8% on the week, but you see this green zone. It's usually when you're in a green zone, you get some pretty good upside pops. You can start and stall a little bit before you get a move. As a matter of fact, note what happened right here. So this is where the low on the cycle was suggested by the ideal cycle brackets right there. It fooled around for a month before it took off on the upside. Here it fooled around for a month before it took off on the upside. You could see that. It even did that one right over here, but then exploded. Here we are right over here. This could explode yet. If you got under that last low with at around 18.5, which is 3 points away, well, then it's aborted. But it's a long way on this stock. I don't think it's going to break down, and I think this is very viable at this location. So here's the daily chart, and I want you to see the cycle rhythms in here. And this looks to me like you're at the bottoming point right now when you look at this. So you can see in here that timing-wise on the daily chart, we look like we're about to turn up. Don't be surprised if U.S. Steel, which is on our worst of the list this week, down 8%, actually has a good week in the next week and maybe even accelerates strongly to the upside. So that's a look at U.S. Steel. Now, another group that we recently discussed was the energy group, and we thought that the bounce that had come several weeks ago with oil moving up 8 straight days, and we thought that that was premature, and that it was likely there was going to be further move on the downside, and talked about the fact that the drillers really looked like they were in bad patterns. Well, those stocks had a really poor week, and actually natural gas stocks also, Noble Corp, Rig, those are the two we're going to look at, Transocean, that they've had bad weeks, down 9% and 6% respectively. So we're going to take a look at that. Noble Corp, NE. For those of you that trade this group, you'll note that Baker Hughes and GE had a partnership came together. So if you look at BHI, you won't see that anymore. I think it's BHGE or something like that is the new symbol. So we've removed that, by the way. So take a look in here as we look at the weekly chart in Noble Corp NE, and you'll be able to see pretty clearly why we did not believe that the decline was over yet, and we thought that the bounce in here was fake. This is the bounce that we got right off of here from 3 and something up to this $4 area, but then we thought it wasn't going to be over with on the downside till August. Again, lots of alignments out till August, so that one continuing to be negative. Our projection says that the cyclical pattern says it still has a long time to go before the bottom. You can see in here Rig also, this thing bounces from 770 up to 880 something. That's a pretty good bounce, right, percentage wise, and then turns down again. Again, we're looking at first, second week of August before this low is due also. So you get some pretty good declines in there for the week, and the natural gas stocks did it also, and we haven't thought that they're done for on the downside either. So we're projecting late July for the low in Devon, and you see it makes a new low in here as the cutter comes out and says that they're going to produce like crazy in natural gas to fight back from what's going on with them in the Middle East. So natural gas gets soft, and natural gas stocks move down. You can see in here now, note the synchronicity. Apache, APA. Also, this points to the low right over here, which is in late July, beginning of August. So that's your alignment there. And if you look at APC, which is Anadarko, well, this one actually looks like it's bottoming already. So in the next week or so, note the 100% fib extension. So where does the 100% fib extension comes from? It's from the distance from here to here, measured again from the distance from here to here. So we're getting right down to that. We would expect it to be a support area as it moves to the target. And right around the area of 41.42, we think that this stock actually can be accumulated. For a pretty good pop. I wouldn't be surprised if you could make 15-20% in the next rising phase in here. Now, most rising phases give you that and more, but I want you to see that while this rising phase was powerful, and this was powerful, and this was powerful, and this was powerful, that's 1, 2, 3, and 4. This one right over here in this big downtrend gave you nothing and then broke down. So it's always possible that you're going to get nothing, but even this is about 3 or 4 points right there. We think that this area, again, 41, 42, is the place to start accumulating in Anadarko, APC. Last group that we're going to look at is silver. Now, again, silver had this huge decline overnight. I mean, 1434, is that a real number? I almost can't believe that. Of course, it came right back to 16 and then fell back under 15 and a half. So talk about a volatile day. We kind of think silver is going to bounce, but the silver stocks have really taken it in here. As far as patterns go, AG for the week down 11%, PAAS Pan American down 8%, and Hecla down about 5%. Let's take a look at those stocks and see if you agree with me that these patterns look like they're in trouble. Now, we've been warning over this last couple of weeks that we were positive on this stuff, and when we saw the changes, we immediately reported them, because that's what we do, check the data all the time and see how it's, you know, affecting the charts, and there's meaning to it. And here you can see in here as this cyclical pattern now has turned down. And so once you break this low right over here, that last cycle low, which you're just getting down to right there, that then points to the decline again into mid-August. You can see that right over there. There is so much pointing to declines into mid-August that my warnings about the condition of the stock market, I think they should be heeded when you see this alignments that are in here. So very close to breaking down under that cycle low right there, and that says that trouble is looming. And here is Pan America and the breakdown, which actually did happen. So we had the note in here to our subscribers. We have the colored phasing in here, and when it turns red is when it breaks that important cycle support, and then you can project down to late August right over here to the expected low. So that says some pretty good weakness expected there as we move forward in time here into August. That must mean that silver, which we expect to bounce, is not going to be able to hold the bounce much. Here is Hecla. You could see it's got a different pattern in there. We expect 2-3 more weeks on the downside in here, and support comes in at around the area of about 460, and at that point maybe you could accumulate it, but overall you could see the downward stair-step movement here. A better pattern than the other two, but still not very buyable as far as I'm concerned. Not looking for a lot in there with this breakdowns going on in the silver market. So for our members, they're going to see those gold silver patterns in later on as we do our short-term view for members. That's it for the worst of the week. We're going to be right back with our short-term view for the stock market for the coming week. All right, short-term view for the coming week. Do this every single week where we take a look at the stock market, look at the daily charts. Before we get into that, in this last week we did some really good videos. We always do great videos, and I think that's pretty significant was one that we did on Thursday, where we looked at the tech sector. The tech sector I follow, which has been, of course, moving the market so closely, has, in my group, has got 80 stocks in it. So there's just a ton to follow when you say techs. There's a lot there. I do analysis on 40 of them, where I show you really explaining in depth the cycle analysis and show the synchronicity in there of the weight that they've put on the market and together, and looking at the dates and price levels that we think that these tech stocks are going to fall to. I think it's really an important video. I've gotten some great comments on it. So also, of course, on Wednesday we did Future Speak, where I do same type of great deep cycle analysis on 23 different futures contracts and the stock indexes. So if you haven't seen that and seen all of our momentum charts, I think it's really important for you to do so. You can see all of our videos, those videos and all of them, plus our rankings and trade setups table, where we look at the 80 best traded, widely held stocks and futures and show you the analysis on them in long-term, intermediate, and short-term, plus our very popular and very important option bias ranking for option traders. You can have all of that, the level 3 rankings and trade setups, all of that information, plus all of our 250 plus videos for a 1-month trial for $43. All you have to do is write slim at askSlim.com. I'll send you that 1-month trial link, and you're not going to believe how much you can learn from my 43 years experience just by subscribing for a month. A just unbelievable amount of information. I'm really proud of it. So I hope you take advantage of that. And also, don't forget, you're watching this on YouTube, give us a thumbs up to our information and leave some comments, and make sure you become a follower on YouTube, and of course on Twitter also. All right, so now let's get into that short-term view for the stock market for the coming week. I always like to talk about what I said was going to happen in the last week before I get into it, and I do that, about all of the 5 major markets that I look at in the members version of this. And what I had said was that I thought that the stock market was going to move lower on the week, and that my downward projection was around 2,400, maybe down to 2,388. We got down to about 2,406. It followed the pattern very nicely. I expected the market to be down on the week, and it's actually around unchanged on this holiday shortened week. So I don't get full credit for that, though it followed the patterns very closely. And then on Future Speak, I did an update on that and talked about a pattern called a falling 3 methods, or a 3 methods pattern, which was highly probable that it was going to have another decline again. Also, I've had this period of extreme risk right in here labeled, which was right into this period here, and then another one beginning actually out over here. So overall, it's been, I would say that our analysis has been really good when you look at this. We got this 3 methods pattern, which are the 3 small bodies inside the big body. Normally you then follow with a in the same direction, in this case on the downside, and that worked absolutely perfectly. Now, you can see our projection in here. What we expect the market to do is to move down early in the week next week and then recover. So our targets for the week on the short term are the same. In other words, still looking for 2,400 down to about this fib right over here, and the 89-day moving average, which you could see it came down and tested right over here at around 2388. So we would expect that this rally on Friday will fail, and that it will move to the downside and then get a bounce. So we think that still being on the short side makes a lot of sense. And then as we get into this period further out in July and in towards August is this period of very extreme risk. So we consider this to be the period that the top is forming and rolling over right in here. The false rally comes right in this period here, which is a couple of weeks away, and then the decline over here. This period over here, this second leg on the downside, is often much more severe than this one right over here. So we're looking again for, early down and recover next week. Maybe not much change, maybe just a small decline on the week. And then the following week, even another choppy week before the risks then pick up in late July. So that's the short-term view for the coming week. And I hope you have loved everything we brought to you in this show. Don't forget, we have that speaking engagement coming up on July 15th. If you're local and you want to attend it, write to me at slim@askSlim.com. If you want our special link, then also write to me and I'll send you that special level 3 link, and you could check out everything that we do for a month for incredible $43. And also I would love to hear any comments or feedback that you have about our show. That's it for the week. I want you to be careful because it is certainly crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show.